Hey everyone, in this video I'm going to answer where I think Taiwan Semiconductor Manufacturing Company, the stock price could be in 2030. Now to make this estimate, I'm going to use several assumptions like its earnings growth expectations, like the valuation multiple. I'll also consider some of the reasons why the earnings and valuation multiple are where they are. Of course, TSM is a major supplier to some of the most popular artificial intelligence companies like Nvidia and AMD, so it's gaining popularity among investors in this AI frenzy. So let's get into this analysis. Let's see where the stock price could be in 2030.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'm going to need to make this stock price estimate is Taiwan Semi's current stock price. As of this recording, is trading at $140 per share. The stock has risen nicely in recent months, jumping from $90 all the way up to $140 per share on the back of the growing enthusiasm for artificial intelligence. I'm also going to need its current valuation multiple. Right now it's trading at a forward price to earnings of 17.9, about the average valuation this stock has traded for in the last few years. All right, in addition to the valuation multiple and current price, I need its next year's earnings per share estimate for 2025. The analysts on Wall Street that are following Taiwan Semiconductor stock, they think the company's going to deliver $7.78 in earnings per share next year. I'm going to use that to base my forecast for where its earnings per share could be in the year 2031. So to go from the year 2025 to 2031, I need a growth rate. And the rate I'm going to use is the Wall Street analyst estimate for how fast TSM is going to grow its earnings per share over the next 5 years. Now, according to Wall Street, they think it's only going to grow earnings per share at a paltry 4.3% over the next 5 years. Next year, they think it's going to be 23.3%. The current year, 21.6%. Then they think the next few years after that are going to be a little bit difficult. The company is investing billions of dollars in expanding its manufacturing capacity, also diversifying its geographical base, going outside of Taiwan, investing in manufacturing facilities in Arizona, investing in manufacturing facilities in Japan, trying to diversify away from its concentration in Taiwan. So that's going to weigh down on its earnings per share a little bit in those years as it spends to invest. And then afterwards, it's going to reap the benefits of those investments several years into the future, probably 4, 5, 6 years down the line. So that's where Wall Street is thinking about Taiwan Semiconductor's prospects over the next 5 years, even though next year the prospects are very strong, but the next 5 years the prospects are relatively weak. So now that we have the numbers that we're going to use for our estimate, let me draw your attention here to the earnings per share for $7.78 in 2025. Remember, I got that from Wall Street analyst estimate for where they think its EPS will be next year. Here I've applied the 4.3% growth rate in earnings per share for the next 5 years. And when I apply that growth rate for 6 years to the 2025 EPS, I get an EPS for 2031 of $10.02. So when I apply that $10.02 EPS forecast for 2031 to the forward PE multiple of 17.9, which it's currently trading at, I get a possible stock price for Taiwan Semi of $179.28 for 2030. That would be up not so much from the current share price of $140 per share. In fact, I think Taiwan Semi's stock price is going to rise a little bit more than that. So I've done a scenario analysis here for a higher forward PE. If its forward PE were to rise to 20, then Taiwan Semi's stock price could rise to $200 per share. A higher forward PE makes sense to me in combination with the lower earnings per share growth rate, because the reason the earnings per share growth rate is lower is because of the investments the company plans to make. It's told investors that it's making these investments, billions of dollars in expanding capacity, diversifying away from Taiwan. those investments are likely to lead to a higher earnings per share multiple for Taiwan Semi, because one of the reasons why it's trading at a depressed valuation multiple is because of the concentration and its geopolitical risk of the China relationship with Taiwan. So if it diversifies away from that, then it's going to get some benefit in the valuation multiple because it'll become a lower risk investment if, of course, all goes according to plan in that time. So for that reason, I think going ahead, the valuation multiple will be higher because all else is very strong for Taiwan Semi. If you look at its operating profit margin, it's one of the highest in any company in the world. Its cash flow from operations is second only to Visa, I think, in terms of the highest number CFO to sales. And so the big factor that's bringing down its valuation is the geopolitical risk. And of course, the business is a very capital intensive business. So that also brings down valuation. It does not have an asset-light business model. It's the opposite of an asset-light business model. It's very asset heavy. Investors are willing to pay lower valuations for businesses that are so asset intensive or capital intensive. You can look at several examples to see that case. You can look at car companies like Ford, GM, Stellantis. They're all trading at forward price to earnings multiples of less than 10. You can also look at telecom companies like Verizon and AT&T and T-Mobile. They're also trading at very low price to earnings multiples because they are so capital intensive, and also in conjunction, they're not growing revenue and profitability all that quickly. But it's the combination of the two, right? TSM is very capital intensive, but it's also growing revenue faster, and its expectations of revenue growth are much stronger than all of those other companies I mentioned earlier that are also capital intensive, but their revenue growth prospects are not as strong as Taiwan Semi. So if the valuation multiple was to rise to even higher levels of 25, then the stock price could be $250 per share by 2030, which would be a nice increase from $140 per share today. However, it's not always going to be good, but what if the price to earnings multiple were to fall to 13? Well, then the stock price could fall to $130 per share from the $140 per share. So in this scenario analysis, one thing becomes clear, and that is that Taiwan Semiconductor stock price is not going to experience, or is not expected to experience, wild fluctuations. It's not expected to be one of those volatile stocks that's going to swing up and down violently over the next few years, because the forecasts going forward are not that optimistic, right? It's forecasting, Wall Street is expecting a 4.3% earnings per share growth rate for the next 5 years. So that growth rate is already pricing in many of the headwinds, many of the billions in investment. Secondly, the forward price to earnings multiple at 17.9 is not very expensive. So that's not expected to fluctuate all that wildly. It's not likely to fall in the single digits in the next few years, unless there's some catastrophe, of course, part of that geopolitical risk. Other than that, it's unlikely to fall into the single digits. So even if the forward PE were to fall from 18 down to 13, the valuation doesn't fall by all that much because it's already at such a low valuation to begin with. That's why investing in companies that have super high, super premium valuations, like in the 60s, 70s, 80s, and over 100, those become even more risky because those forward PE multiples could fall dramatically from a forward PE to 80 down to a forward PE of 40 or 30. And that would cause a huge decrease in valuation. That's one of the reasons why those stocks I mentioned are riskier than average. So back to Taiwan Semi, where's my most probable scenario for where I think the stock price will be in 2030? I think it's going to be in the range between the forward PE of 20 and 25. And I think the stock price is going to be between $200 and $225 per share by 2030. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.